No echo at all.
Morning, Tim.
How are you, Fred?
Not bad. How are you?
Good. So the numbers weathered the storm, the hurricane,
With the storm, yeah.
blew by.
Had some
Looks like it was a
friends
nasty
down
one.
in Indian Rocks Beach near Clearwater, and the one response we got was, "I lost a lot." So I don't know how bad that really is, but I did see some video of people in their kayaks swimming in their living room. Yeah, that's sad stuff on the West Coast. But having said that, the markets don't stop; they just continue to go higher. You know.
Well, Maria said, the market's up. I said, yeah, well, today ends in a DAY, so the market should be up.
That's right.
Uh,
I was just looking at the numbers year to date, Dow, Nasdaq, and S&P, and we're all either at the highs or within ticks of the all-time highs. There's no fear. We talked about it a couple of times where there might be two-way risk. There's no two-way risk. You buy the dips and you're fine. You know.
yeah, I got sucked in when we had a couple of days lower, and I thought risk was trying to enter the market. But no, it's one of those things where you buy with impunity.
Yeah.
Everybody is certainly convinced
Yeah.
that
It's a scary
uh,
world.
well, I've seen this before, and you have too, I'm sure.
Yeah.
Um, the thing is that the level of fiscal stimulus is not changing. We're spending literally trillions of dollars, $7 trillion a year, maybe spending that, and a large piece of it is borrowed. Uh, so the monetary stimulus, when it comes in, simply adds to the fiscal stimulus. And I think the Fed, I've said this before, I think the Fed is easing through the back door. I think the balance sheet's growing. They're supposed to be tapering the balance sheet. Doesn't seem to be happening. Balance sheet still stands. I looked at it the other day. It still stands at around $7 trillion. That's massive.
Right.
It's an enormous number. The Fed balance sheet is probably bigger than the GDP, and
7 trillion. Yeah.
and we're adding 2 trillion to it, to the debt pretty much every day, every year. Um, so you wonder, we're creating a lot of money. Both, the Fed is spending it. Sorry, the administration, the government is spending it. The Fed is printing it, and this money finds its way into stocks.
I saw something yesterday, and it was a blurb on X. An economist was talking about that the Fed is trying to get the banks to guarantee, like that FDIC insurance. I think it was the FDIC insurance. I didn't read the whole article, but they want to increase that number that the banks guarantee. And this guy's point was just what you're saying. The Fed has created so much money that people have put money into their savings account. The people that have money in their trading and savings accounts, and it's ballooning. And there's fears that if the banks, if something does happen, that there's a backstop at least. I don't know if that's the right answer.
I was. You caused me to think about this. It was around 19. I'm going to say 86 or 87. It might have been 86. Um, when Ohio did not have FDIC, and a small bank, it might have been savings and loan, I don't remember, and a bank closed its doors because there was a run on deposits, and I remember getting short the dollar at the time, and I was in Buffalo, so it had to be 85, I guess, and I was talking to somebody in New York City, and they said, "You're getting short the dollar on a bank run in Ohio?" I said, "Yeah, I am." I said, "There's other reasons too, but this is a catalyst." He said, "Why?" I said, "Pick up the phone, call Switzerland, ask for any Swiss. Tell them people to line up inside of a financial institution in the United States and see if he asks you for a bid for dollars." And the dollar got crunched on it, and then subsequently we had the Plaza Court. But this was the beginning of a move. And FDIC was ignored throughout the rest of the country, and everybody thought, well, it's a small bank. And they upped the FDIC. It was only about 40,000 at the time. I don't know what it is now. It's got to be 300,000. But given the size of the money supply and the aggregate size
It really
of
doesn't.
the Fed balance sheet,
Yeah.
it should be up. It should be 1.5 million.
And I think that's the point that this guy was making. So Fed poured so much money into the economy that there really is no protection. You know?
Yeah.
People that have money have money, and we've talked about this over years: the haves and the have-nots, and that's where we're at still.
Well, that's the gap. That's the income gap. They keep measuring affluence by saying, oh, the gap between rich and poor. No, I think what you got to do is you got to figure out who was rich and who was poor 7 years ago and see how that looks today. I mean, if we were going to start an economy today, we'd want one with upward fluidity and upward mobility. We'd want it easy for people to move from the bottom to the top, not take a snapshot and say, well, these are high and these are low. You get distorted readings here.
Right.
But that's what the press does.
Right.
It'd be different if I were king.
If I were king of the forest.
I saw I'm on that Facebook page with the old brokerage shop,
Mm-hmm.
the one that I was a founder of,
Yeah.
and Tony Alloy's son.
Yeah. I saw that. I saw that
yeah.
post. Yeah.
I wrote a story about what happened, and I don't know if you read it because Facebook may have taken it down, about playing box ball and then the sledgehammer on the other side trying to knock the wall down. And it really was Animal House comes to Wall Street, I mean, I can remember looking at the safe that we had in that office, and then on the wall next to the safe was the combination to the safe. It was such a crazy Marx Brothers kind of reality.
Yeah.
I think I'm right. I think I'm going to write a letter to Tony's son and send him my book because he never knew his father. He was like 11 years old when his father died.
It's true. Yeah.
And I knew his father well. And people who know his father are saying he was a great man, and Tony was in many ways he was a great man. But Tony went through what I went through. I was 20 years old when I started that company. Think about what you were like when 20 years old.
That's right.
All of a sudden, I'm at last starting that company, and I go from rags to riches at 20. Well, Tony went from rags to riches at 28. I guess he was maybe 7 or 8 years older than me. And that kind of experience is something that I don't think he could understand what his father went through. So I'm going to send him a copy of my book when I explain the phases.
I'm sure, yeah, that'll be very nice.
What we
I'm sure
go
they'll
through,
appreciate
yeah.
that.
Yeah.
Yeah, those
So-
were interesting times in the markets. I remember working with Mark at the French bank that I first worked with.
Yeah, and that was in the 80s, right?
79, 81, 79, I think I left in 81. But standing on his head in the trading room with his Tai Chi soap statues, it's like he had his mantras and he would pray. And he was ahead of his time. Yeah.
There was so many theme park characters, I mean,
Yeah.
each person was a theme park in their own right. It was really a wild
I remember
time.
as a kid working at your shop and doing the billing. And there one morning and the phone rings and everybody's busy and I'm 17 years old. something
George.
like that. Yeah. And I pick up the phone, hello Malandoni, where am I? It's just like, I don't know where you are, I know where I am. Who's this? This is George, where am I? It looks like a Holiday Inn. Tell them I'll be in later. It's like, click.
Yeah.
It's
He was
just one day.
he was an interesting character, one of many,
Yeah.
one of many. And I think nothing was sacred was kind of the watchword. I mean, we worked really, really hard, and we played way too hard. And they would say or do anything, It was just it was a great time, and the markets really drove. You lived with that kind of daily risk and volatility. You were taking all kinds of risks
Oh,
every day, every minute. And I got a feeling we're going to see that again. People have been lulled into a sense of security because these markets have been so controlled and
mhm.
contrived. You know, I read something this morning politically, which was kind of interesting. Uh, Trump had to move one of his venues in Wisconsin indoors because the Secret Service said we can't protect you if you go outdoors. You got to go indoors. So he shrunk the size of the venue and went indoors. And now a whistleblower has shown up and said, "Well, the administration is doing this. They're pulling resources away and curtailing their resources so that he has to go inside and shrink." Now, this would have been a crazy story 5 years ago. We would look at this and say, "Well, this is."
Yeah.
But now we have to think about whether or not it's credible. You know?
Everything's believable.
Yeah.
It used to be, it's a crackpot. Yeah, it's nothing. It's crackpot. But it's not just that. It's every aspect. Um, it's everywhere you go.
With the job numbers. I mean, can you believe the statistics we're getting? Nobody believes it. The market trades off it still,
Yeah.
but we don't believe it. We look at the revisions, and the revisions, when you get them, are obscene.
And the healthcare and the drug companies are big pharma. The newsletter we read, he wrote yesterday that if there was a Harris presidency, she's going to really hit on big pharma to lower prices of some of these weight loss drugs. And I replied back, I didn't copy you in, I should have. And I said, yeah, I think you're right there, but I think the bigger issue is if Trump wins and RFK is involved in the administration, and he's going to beat Big Pharma up. There's going to be hearings, and he's going to push them, and that his livelihood is pushing on that string. So I think Big Pharma's in trouble come November.
Are you sure that the own puts in a drug ETF?
No, as a matter of fact, I'm long. Healthcare is a big portion of my portfolio, and I'm waiting another few weeks before I start to lighten it up and maybe buy some puts in that healthcare.
Yeah, you're really saying whoever gets elected is going to.
Yeah, I think I think you got a couple of more. But I'm afraid to sell the market because it goes up in your face every time.
Yeah.
You know?
Yeah, it's true.
Yeah.
All right.
I see that China eased overnight. Did you see that?
Once again,
Yeah.
and that's
Chinese stocks
reinflation.
flew.
This
Yeah.
is the commodity scenario.
Mm-hmm.
The point that financial assets are expensive to hard assets is really true. And I remember looking at that chart saying that commodities to hard assets are at that gap is widened tremendously. Yeah, might be. That might be a good pairs trade, buy a commodity ETF and sell a market ETF. But like you say, the market just runs up in your face
You just
anyway. So wait
Yeah.
for that leg.
Exactly.
Okay.
All right. Anything
Have a good
else?
day.
You too. Good luck.
I
Thank
fly
you.
tomorrow. I'll talk to you over the weekend.
All right. Bye.
Okay.